Welcome to Trading Lounge and the SP 500 for the 30th of August and starting on the 4-hour chart here. So we'd been looking at this as a triangle pattern through here as an A wave, a B wave, a C, a D and an E wave, with each wave having 3 waves in its structure. So from wave D to E here, we've also been looking for 3 waves as an A and a B and a C wave here. So yeah, we can get a turn. So I think in terms of other counts and how to short this and what's safe and so on, we could say at this particular point in time that if the 2900 here became the retested resistance or even moved down that far, then we can look to short the market. There would be a bounce off that, as there was a reaction here. Any move back down here, there would be a reaction off that as well. So in terms of safe short trades to capture this down here, we could say that the 2900 as a retested resistance would be the short trade. Okay, now we can make effort to and strategies to get in earlier than that up the top there, and we'll look at that. But also too, I understand the importance of not being caught up in one's own opinion as well. You know, I want to understand also too that if I'm wrong, where would I be wrong and what would I do about that, you know? So we could say that I mean, the market is in an uptrend and it's moving up quite strong. Not that that's a big deal in today's environment with news, you know, from Mr. Terrible Trump tweeting out this and that. So, you know, we do need to be prepared for also a move to the upside. You know, as traders, we don't care which way the market's going. We just want to be on the right side at the right time. So that takes priority over, you know, where the market is going to go, you know, trying to get that right. So taking setups, trade setups and signals is more important than, you know, having an opinion of thinking where the market's going. So, you know, we've been right in this little move to the upside here, and I want to talk about this. But, you know, what happens if I'm completely wrong and the market just continues to the upside here, and we get 5 waves up here from the low, because at the moment we've got an A and a B and a C wave. But what about if this is wave 1 and wave 2 here, and we're going into a 3rd wave here and a 4th wave and a 5th wave moving up here? So that can occur. Just, you know, this is a pattern here that we could be looking at a larger flat pattern moving through here. So we could look at this as wave 1 here and 2 here and then a 3rd wave here and a 4th wave and a 5th wave here. So this is why I was saying that excuse me, if the 29, because any wave 4 coming back here wouldn't find the 2900 as the resistance here, it would find it as the support. So this is why I say that the 2900 can play a key role in a safe short trade in the market, but it could come down and like it has bounced off here. It's eventually failed, but that's what can occur at this particular stage here. So we need to be mindful of this here as well. So, you know, obviously these tops here in the market here, these tops running through here of going to offer, you know, resistance just naturally in terms of supply and technical analysis and so on. So from the 2900 here, if we use the trading levels, we can go 10, 20 and 30, right? So that's 30 there. So we know that when we get support on top of group 1, then we'll be going higher from that point. So we understand that we could get a setup on those levels coming through that space there. So the type of setup that we would be looking for through that would be these types of things here, the classic trading levels pattern here, where if this was 2930 running through here, then we would have wave 3, wave 4 and wave 5 here, and then would have an ABC correction. But then if it found support back on this level, we could go long. Of course, we can go long on this top level here or this level here. For that, the variation on that, of course, if we look at this as the 2930 here, the arrival, the reaction is wave 4 and wave 5 here. Moving down here, I should have drawn the entry on top here as well. So that would be the first one, and then we bring it down to this one here. So if any of those are triggered, then then we need to be long at that point. So this is a setup for a long trade on the 2930. If this occurs, we need to be long. Excuse me. So going back into these areas here, we'll look at this setup that I talked about on the 2930 in a minute when we get into the 1 hour chart and the tick chart and so on in that point there. On the cash market, when I look at the cash market, we'll go to the 1 hour chart now. So on the cash market, it does appear that we can, this is obviously this particular chart is from IG Markets, which is where the data is coming from, but it's IT finance chart, and it would have a mixture of the futures and the cash market on this. So so on the cash market, it can appear that we've got wave 1 and 2 here, and 3 and 4 and 5 here. So it is possible that we've got a top in play here. So we've got the 5th of the wave C of E of B here. So we can come straight down from this point here. Now, like I said, the 2900 would be the safe trade here. If you wanted to get in early, then we can get in pretty much on the current lows here. Let's just move this to, let's just get rid of this one here. We'll look at this on the tick chart anyway. So we can look to go short with a small position if you wanted to on these lows, or the 29. Let's just say the 2920, shall we? So, and in that case here, we'd be looking at this in terms of the market would come down and bounce off it. It would come through here, come back and check it. And then then you find that low there, and then we move this here, and then any breach of that low here, then that would put us to the downside. And yeah, so that's cool at that point. So you'd look to sort of build in at that point. So let's just go in and have a little look at this leg here on the tick chart first. Probably bring a bit more data. So this is wave B here, and we've been looking at this as wave 1 here, ABC for wave 2, and then 1 and 2 and 3 and 4 and 5 here for the third wave and the fourth wave. So when we look at this, forget all the other numbers on here, but basically it's quite a nice looking 1, 2, 3, 4 and 5 here, isn't it? That's what it looks like. So that could be the top there as wave C here, wave 5 of C, of E, of B here. So that can be a top here. The other point here is that I don't have a very clear 5-wave structure up here. So this could also be counted as wave 1 here and wave 2 here, then wave 1 here and wave 2 in blue here, and that would make wave 3, 4 and 5 here for the third wave up here. So this market could come back down here to the wave 4 of 1 lesser degree, and then have another move up here for this. I can't draw on this side of the price over here. So that particular pattern that I was looking for before in terms of a long trade would be the arrival, the reaction here in 3 waves. That's what it's doing here. And then push up here for a top in here. I'll just take it to 40, and then it would have its ABC pattern here, and then it would move up from here. So the long trade would be in this space here, taking these highs out here, and that would give us support on top of 30, which is the top of group 1, and then that would bring the price at, if I can move that up, that would take the price up to 29.50 at that point. So that's, I want to look at all the options here. Okay, so we know that we need to be short below the 29. That's not a problem. So there's just that, space in here that we've got to work with here. What we can do is, obviously, if you've been long here, what we want to be taking, the target was the 29.30, so we've reached that. If the 29.30 here becomes the support, and this is the pattern that we're looking at here, and within that pattern we've got the arrival, we've got the reaction, so this is the arrival, this is the reaction here, and then we'll see a push up here for that, and then we would see, don't chase that, and then we'll see an A and a B and a C come back across it, and then we'll have that structure there to build on, to go to the upside there. So that's what we can do to the long side. That would be a safe trade to the long side, and you would be trading from 30 to 50 at that point, and then you use that pattern here again on the 50 here, if that's going to be the case. On the short side of the market, just going back over this, we know that the 2900 would be the safe short trade here, and once again we would use that scenario. I'll just do it over here. So the market would come down here, there would be some type of corrective move back up, and you could probably short that basically there, because any move down here would be like this here. So you can build in, if it reaches the 29, then if it reaches the 29, then that we're looking for short trades. But you also know too that you're going to get some sort of bounce off it, so you can short the rally in here and then look to build in on the other side here. If the 29.20 becomes the retested resistance, then you can also short that as well. And here's an example over here that we can just use rather than me drawing it. So the market's come through this case, and it's retested, and then you can short below here. And the same thing here as well. You can short below here, you can draw lines through here. The fact is that it's retesting and it's failing. And if you're using the futures market, then you'll see these rallies here. They'll be on less volume than the move down, because that's what corrections are. Corrections are on less volume than the previous move. So on the futures market, you'll be able to see that, or the cash market if you've got the volume there. The volume that you see on a lot of Forex and a lot of CFD sites, that volume is not real volume. They're volume indicators, and they every time the tick moves, they will add that as one volume point. So they work quite well in reading volume. And if you need to learn how to read volume, then you can look at our website. There's a sort of simplified reading volume with price bars and the volume. So so the other thing I wanted to mention too, that if we do short it here, I'll just remove these here. And the other point too is normally when you're working with group 1 here as 1, 2, and 3 here, the number 2 normally holds the position here. What can happen here in a bullish market is it can come down to 1.5 here, see the 29.15, and then it moves back up from that point. So that's also a nice way to look to get into the short trade at that point. So what we can do in the bigger picture, if this top is correct, then what we can do is we can get a small position here, and then we do the same here as again under here as well. We can look to short under here and then also on the 29. So the game would be to get a small position here with the resistance of 20, a resistance of 10, and a resistance of 29, and that way we can build in 3 trades and they'll be manageable at that point. So you're not shoveling the whole position in at this particular point here. We're just putting a smaller position in, and then in 3 lots here. Of course, we could also use group 2 here to build in as well at that particular point. So that's what we can do. So let's just go back to the hourly chart here, and let's just say that we're going to get the first one here. If these are all ifs, what if, and copy that. We're going to put that one here, and we're going to put this one here. And then you can look to add to these ones down here. And then on the long side here, if the market does push up, because I've got that other wave count here, then we'll do that in terms of, well, we've got the arrival already in, we've got the reaction playing out here. There'll be the first high above the level here, then there'll be a bounce here, and this will come down here, and then we can move up from that point. So in that case, we'll copy that and we'll just put that there. And you take part profit here, or all of profit at the 50, and then you also look to get back in on top of the 50 as well at that point. But you need that. You need this setup, the arrival, reaction, first high above the level, this, and you do that on top here as well. And we've got it covered that way, haven't we? So we're using we're using the analysis to say to ourselves, well, this could be wave 1 and 2 here, and moving up for 3 and 4 and moving up here higher, and this is how we'll handle it. If this count is correct here, then well, let's start building in on the short side here, and the risk reward is fantastic because we'll be going, we'll be coming a long way down here, so you don't have to over trade. There's plenty of time to build into all of this. Alrighty, I've rabbited on long enough, so cool. Alrighty, thanks for the support. Cheers.
Report unless it's done.
Really?
Just holding up some plates.